Hello and welcome to the 23rd episode of the Living the Dream podcast. I'm Linas, Kilius. I'm joined, as always, by my co-host Eryn and Richardson. We're both brokers, managers, and partners at Centum Heritage Group. And we've got a special guest on the show today, Jason Christie, mortgage broker with Centum Financial Services, as well as a fisherman of questionable skill. Jason?
Way to bump my tires there, buddy. Thanks.
Yeah, actually,
I'm getting all the tips from Jason. So if it's questionable, so far, all the tips have landed some good fish. So Jason, yeah, I think you're a pro.
Thanks, buddy. I appreciate that.
So about a year ago, I remember talking to Jason and Eryn about fishing. We were just at a venue together. And I think I made the mistake of saying, oh, isn't it just all luck? And the looks I got from both of them, because both Eryn and Jason are very avid fishermen, made me a little bit worried for my health going forward. I thought they were going to jump me or something. But since then, because I never really fished before, I went out with Jason and Eryn and had like an absolute blast. I can see how there is a lot more skill involved. Yes, Jason, you've convinced me there is skill involved in fishing and knowledge and everything as well. But I think I might have caught the fishing bug a little bit too, because it's really enjoyable. I've been out a couple times since.
I'm a big fan of the quote, Linas, and I'd like to reference this anytime I hear somebody say that as it pertains to fishing. Luck is preparedness meeting opportunity.
Hey, the fish have to be there, and sometimes they just have to be biting, right, Jason?
That's it. Yeah. You got it.
But just the nuances of knowing where to go, what kind of lures to use, just like how to go about. And again, I feel like I'm not really speaking from the side of knowledge here, but just like how to fish properly, right? Like there's a lot that goes into it, and I just had no idea when I was out there.
You can draw a lot of parallels to our professions on the real estate side, the mortgage side, in terms of attention to detail.
Yep.
Right.
If you want to catch fish, you go with a fisherman. If you want to buy a house, you go with a realtor, right?
You got it.
I was told by Jason's wife, Steph, that it's a mental thing, right? Like I think you actually take your mental notes of the temperature of the water, cloudy, sunny, time of day, area. Like you take all of that and you're taking mental note exactly where to go, when, and what body of water all the time. Is that true?
100%. Yeah. And more.
That's great. And more, of course.
Pressure, moon phase. Yeah, it's a science. Yeah.
And have you got it down to a science? Does it work, or is that all just?
You know what, buddy? It's an ever evolving, sport. Like there's so many environmental factors and shifts and changes and patterns and behaviors and just pressure, right? Like when you're dealing in areas where fish are seeing lots of pressure and different stuff like that. Sonars, the advancements with electronics, all that kind of stuff, you have to adapt. We were out last weekend. We even had to get to a point where we had to turn our forward-facing sonar away from the pods of fish we were locating, because if we kept it on them, they would just bolt. So we'd literally have to turn the forward-facing and then cast at them to get them to bite. Yeah. We should actually think about a fishing podcast. I love this. Yeah.
I was going to say, I think I made the mistake of bringing up fishing, because I know that we could talk you guys could talk for hours about it.
Yeah.
But that's not why we're here today. We're here to pick Jason's brain a bit more on the mortgage side of things. There's been a lot of changes upcoming, as well as like in the pipe for the mortgage space. We've had a lot of cuts to the overnight lending rate as well over this year, and we're expecting many more of those to come. So Jason was the perfect person to bring on here to talk about some of these things. But so let's just start off, Jason. Like, why don't you tell everybody about the changes to the mortgage rules that are upcoming, and tell us about those.
Yeah. So just so you guys know, I'm equally passionate about home financing the mortgages as I am in the fishing space as well.
I think you just lied to me.
But I mean, we've experienced 4 rate cuts so far. Fully expect another December 11th, which is positive, and it aligns really nicely. So there's been a number of changes that have been introduced in 2024 that cumulatively will have big benefit or translate to big benefit for Canadians who want to get into the home ownership space, investment space, and so forth. So, going back to the increase to the RSP withdrawal limits as an example, to 60,000 per borrower, a big change. And that aligns to what we're talking about in terms of the increase for the ceiling, which I'll speak of momentarily. Back in August, we actually had the introduction of the extension of 30-year amortization for first-time home buyers, but it was specifically on new builds only. So that was actually So positive direction, certainly, and a good positive signal, but, impact a pretty small portion of the, home buyers for, 2024. So the great news is with their year over year, as you would well be informed, and I'm sure I've talked about on other podcasts, the increase year over year in terms of activity, in terms of home purchases and sales, right? So positive momentum there. The other rule changes, so one actually just came into effect this week, not as much of an impact in terms of the buy and sell transactions, but for homeowners, and this is virtually applying to all Canadians, right between now and end of 2026 with mortgage maturities, was the removal for stress test qualifying if somebody wants to move their mortgage from one institution to another. So they've got a renewal coming up. They don't necessarily need new money, so they're not refinancing. But there's, the banks, let's be very honest, the banks are being extremely competitive with offers and so forth right now to earn those dollars as originations start to increase, right? So competing for those relationships and dollars. So that's a positive for consumers, for Canadians, homeowners. And that what we're most excited for is the changes that are coming up very soon on December 15th, so an extension of the one that was introduced in August for first-time home buyers, right? The extension of the high ratio or insured mortgages from 25-year amortization to 30-year amortization. This is exceptionally positive because, you combine that with more affordable or improved qualifying from an interest rate perspective, as well as that 5-year extension in terms of amortization is material when it comes to affordability of people's budgets and, most importantly, qualifying, right? So that is a great news story. The other one, which is material, especially in, certain markets, like I'm here in Bradford, Ontario. I think, Eryn, you're in Newmarket, and this would apply to a lot of pockets in Kingston too, I'm sure, Linus. But, that threshold of $1 million purchase price for insured mortgages or a high ratio mortgage going up from $1 million to $1.5 million is also material.
Yes. So all of these little changes, because realtors ask all the time, like, how is this change going to affect things, right? How is it going to affect the real estate market? And generally, like, each one of these things in isolation doesn't move the needle much in terms of affordability, but there's so many different little changes. Then the fact that interest rates have come down from, like, the overnight lending rates come down from 5% to 3.75 and is expected to go down to 2.25 by the end of next year, according to some major banks, right? That all of these together combined lead to that moving of that needle in one direction to increase that demand, make financing more available and affordable for people. So one thing the narrative that we've been going with is that because the real estate market typically goes into hibernation this time of year, which surprisingly isn't as much the case right now because of all these things that are happening. But if we have any more rate cuts, which are expected in December and January, when the market comes back to life in the spring, we're expecting everything to kind of come to a head and volume of sales to start to increase again. Just anecdotally, like, we're hearing, like, from all of our realtors saying, like, a lot of people are holding off until the spring to list, and everyone's like, yep, I got like 3, 4, 5, 6 listings coming up in the spring, and they're all really excited about it, considering how unaffordable many homes have been from the financing space over the past couple of years. They haven't been able to see that kind of volume, so it's been an exciting time for realtors.
Oh, absolutely.
I had a question for Jason, and I'd like to talk to you about it from the realtor perspective. Dealing with buyers and sellers, one of the biggest things in our industry that we talk to, especially sellers with, is they want to be able to be in a perfect situation where they can purchase a house and know that's the house they're purchasing. But the house that they're selling, unfortunately, has to sell in order to purchase the other house. And what do I do first? That's the question. What do I do? Do I purchase? Do I make a conditional sale? Is that even possible? You get all these situations that we have to navigate and give good advice to our sellers. So, I mean, the best situation would be, hey, listen, why don't we purchase first? Because we're now on an upwards market. So if you're purchasing on a low and then selling on a high, it's always your best benefit. So we're in a marketplace where if you purchase today and then the sellers goes, perfect, I'll buy a house and then we'll sell ours and I'll bridge, and I'll purchase firm And it's okay because I can just bridge finance between the buy and the sell. And we said, well, yeah, but is there a guarantee we can get a firm deal in place in order to make that bridge happen? And we have to educate them that you need that firm deal. Now, I spoke to you a couple of weeks ago, and you actually, so first of all, let's start there. Can you explain to everybody what bridge financing is and why, that might not be the best solution, or maybe it can be a good solution? Let's just go into bridge financing first.
Yeah, absolutely. Yeah. So I think you made a really important point, Eryn, in terms of timing of market right now. You're absolutely right. There's a lot of attractive opportunities from a buying perspective. And there's a lot of folks that feel, with the Bank of Canada just announced its interest rate policy meeting schedule for 2025, the first meeting in January 29th. And then March 12th. So you've got that and full expectation that, affordability is going to continue to improve. And absolutely, people are thinking, if they haven't already listed, then, the spring or approaching the spring would likely be their optimal point to consider listing, right?
Mhm.
So what bridge financing is, so if you have somebody who is purchasing and selling, and there's so many potential benefits of bridging or thoughts, in terms of for consideration. So obviously, closing, you've got a firm purchase, as you mentioned. Traditional bridge financing means, so if you've got a firm purchase accompanied by a firm sale, right? Then clients have the ability to go, through us, through a mortgage broker, mortgage agent, mortgage specialist at the bank, or an advisor at the bank, their lending institution, and get a traditional bridge loan, right? So the requirement of that is obviously, as you mentioned, must have that firm sale. The benefits to somebody in those scenarios, obviously, allows for, packing, organization, a comfortable transition or move. More and more Canadians are moving across country, right? So either from Ontario to Western Canada or Atlantic Canada. So, bridging in scenarios like that can make a tremendous amount of sense and be hugely beneficial for Canadians. In terms of the kind of non-traditional bridge, as you would imagine, or as we kind of have talked a little bit, and we've seen this actually come up a few times more recently, and we've executed this for clients where they've had a purchase, they've made a firm purchase, whether it's a resale or new build. They've had their property listed for sale for some time, but the price point in which they're expecting or need or want is just not yet there. And so without that firm sale, not in a position to go to to the solution of a traditional bridge loan. So and I'll just preface this to say, when we're talking about private bridge financing or private solutions to accommodate a bridge, for the scenario we're making reference to right now, in the mortgage brokerage world, it requires the clients and partners, realtor partners, are talking to mortgage agent level 2 or mortgage brokers. Okay, so if you guys recall, just to go back for a second, earlier in 2024, graduated licensing was introduced in the mortgage space. So mortgage level agent 1, mortgage agent level 2, and brokers, right? Mortgage agent level 2 and brokers are the only ones that can actually provide advice, engage in conversation, and fulfill solutions on the private side for Canadians. This is a great thing, right? It's a big responsibility. There's risk and so forth involved and associated with. There's careful analysis that's required. So I'll just preface it as we talk about this amazing opportunity and solution, that you need to make sure that you're engaged with the right professional, mortgage professional. Okay. And for all the realtors out there, this is really powerful information to know. It's an amazing solution to be aware of because it opens up so many potential opportunities for you. Yeah, don't try to be the expert in this space. You definitely want to engage with a mortgage professional, qualified mortgage professional, to help, navigate, that space with your clients to make sure that it makes sense and that the risks are moderate. So this bridge solution, essentially what it is, guys, is we can actually set up loans for clients without having that firm sale so that they can close on their purchase comfortably today. If they've got their property already listed, they can continue to keep it listed. And as more offers come in, or more competitive offers or reasonable offers come in, then they can have some patience when it comes to waiting for that right moment. Or if they are choosing, hey, yeah, it makes far more sense to us to list in February or March, whatever the case might be, then they would have the ability and the power to do so and be in control. So yeah, essentially the bridge is bridging exactly that term, the gap between purchase and sale. Yeah.
There's so many scenarios where this could help out.
Yeah.
One thing that we've encountered a lot more over the past couple of years when putting in an agreement purchase and sale on a purchase is a sale of purchase of property clause, an SPP, right? So I've seen so many of those go to their expiry of the condition date, and then they have to let the property go, right? Because they couldn't sell their property in time. And this gives you a potential alternative to be able to, hey, let's get in touch with our mortgage broker or mortgage agent level 2, right? Talk about these solutions and see if we can potentially secure some private bridge financing. We can waive that condition, carry the 2 homes for a period of time, and then relist in the spring, or just like give it a bit more time to try and properly sell the property. So it does give a lot of flexibility, another tool for the tool belt. Can you talk a bit, Jason, about like how much this costs compared to a bridge, like a typical bridge finance? So like if there's any sort of flexibility, or what are the parameters, how you qualify for this kind of thing too? Because I mean, you're carrying 2 homes, and there comes a cost with this too, right?
Yeah, absolutely. And so again, just going back to that careful analysis, cost benefit analysis, to see what makes sense, what makes most sense for given any client situation. And there's also that emotional and stress factor too, that, to take into consideration. So, and I'll just, before I talk about costs and structure and some of that benefit, I'll share a little bit of a story anecdotally, like clients that came to us, new build purchase, they've had their house for sale for some time now, just not selling at the point they need, price point they need. They've been experiencing tremendous anxiety and stress over, the fact that their house has not sold. They extended closing with their builder at a pretty significant cost, like thousands of dollars to extend by 30 days. They didn't extend 2 month, 30-day extensions at significant cost to them. So the loss of the sleep factor, the stress factor, the cost factor of not feeling like there was an opportunity or a solution for them to be able to comfortably close on their purchase and hold off on selling until they get what is fair and reasonable. And I'm sure without question they'll get that price that they're looking for once we're in the new year. There's actually even maybe beforehand. But speaking from a cost perspective, so traditional bridge financing, if you go to a bank, for example, your cost from an interest rate perspective is typically between 11 to 13%. So it is prime, which today bank prime for most financial institutions, 5.95, right? Plus 5% would be a kind of a safe baseline as far as cost goes from a bridging perspective.
And that's a cost on the difference that you're borrowing?
That's exactly right, Eryn. So that's the cost on the bridge, right? On the bridge loan. From the private solutions that we're making reference to, it's a little bit different. So qualifying is very different. Servicing is different. So when you have a traditional bridge loan, you also have to make the monthly payments, right? So if you've got, a $4,000 interest payment, you have to service that payment for the life of the bridge loan, right? The solutions that we can potentially find for clients on the private side, we're from an interest rate perspective, we're starting at prime, so 5.95 plus 2%. So starting there. And so again, every situation and scenario potentially a little bit different. So I would say the range would be that prime 595 plus 2 to 595 plus 4 would be the range that we would look on the private side. There is a difference though. On the private side, there are also what is referred to as a lender fee and a broker fee. Okay. So lender fee, because we're talking about the private space, right? The lender fee is charged directly to the client. broker fees. So private lenders don't typically pay the broker or the mortgage agent. So we typically charge the client directly. So we'd be at 2 to 3% typically, between both the lender fee and broker fee. So typically 1.5. So if it's for us, for example, if I was lending or brokering this, it would be 1.5%, and lender fees typically 1.5 to 2% as well.
The
Okay.
crazy part of that to me is that it's less expensive than traditional bridge finance. Like, because usually going private space is more expensive, right? So
Yeah.
I think that's a bit of a thing for a lot of realtors to wrap their heads around, is that it's actually the other way around in this case.
Yeah.
And then the other question I have for you too, Jason, because you don't have a firm deal sale in place in these cases, so it's just like open ended. Like, how long is the potential term for something like this as well?
Yeah,
Because you
no,
don't know what the termination date is going to be, because you don't have the firm sale date of your house yet.
yeah, no, great question. And so just an important distinguishing point there too. So like a traditional bridge loan, they're not registering a mortgage charge on that sold property, right? So that's why that firm sale is so critically important, because you've actually got that contract in place. In this private scenario, there would be a charge registered on the unsold property, right? Or if there's enough equity in the new purchase, if we can do it on one property alone, then we do that and accommodate it that way. If there's, not enough equity in either one of the homes, then we would do what is referred to as blanket charge, right? So that, you're across both. But from a loan restructure perspective, and this is where it's hugely beneficial as well, assuming there's sufficient equity in one or both of the properties, we have the ability to do what is referred to as a prepayment structure, so that the clients do not actually have to service the loan with a monthly payment. So they can comfortably go through the listing process, move into their new home, adjust budget, so on and so forth, with their new reality and their new purchase, and not have to worry about making that potentially significant interest payment for the time the loan is outstanding. Now, from a term perspective, clients that we were working with, more recently, it's not likely that they're going to need more than 30, 60, 90 days. But what we do is we typically structure it as a 6-month term, fully open, with prepayment. So that means if they sell in 30 days, there's no penalty for them to execute that close, pay out the private loan. And from a prepayment perspective, basically what we're doing is the charge is accounting for what those monthly interest payments would be. So if we've structured it for 6 months of prepayment and they sold after 30 days, 5 months of prepayment would go back to the client. So we structure it open, so it's flexible, no breakage costs. We structure it oftentimes prepayment, unless the client specifically says, I'm comfortable with cash flow, it's not an issue for me. We'll make the lump sum or make the monthly interest payment. And then from an affordability perspective on the interest rate, obviously lower price point than typical traditional bridge loans.
I was hoping I could chime in for a second.
We didn't let Eryn chime in ever.
I'm just gonna, if you don't mind, I kind of want to paint a picture, because in layman's terms, I look at it from, I want to get the basics here.
Yep.
I used to use bridge financing when I was working with buyers and sellers, mainly out of convenience for the seller, so that the seller can, like you had said, move into their home, complete some of the renovations, and do the move not in one day, because it's very stressful. So I always suggested it for convenience sake.
Yep.
It wasn't a risk reward scenario. It was literally buying yourself some time. And for the cost associated with that, maybe it was $4,000 or $5,000, maybe. And every situation is different for the amount that you have to borrow. In this situation, which I've never, put anyone in, it's really unique, because the concern was always a risk reward of buying a property and then finding the property you want and then selling second. And there's a risk associated with, am I going to sell my house? Yeah. And then, of course, if you sell your house first, am I going to find the house that I want to purchase, because I have a short period of time? So right now, what you're doing is you're looking at a risk reward scenario, And from a dollars and cents standpoint, maybe it's about finding the best property and then selling and just buying yourself that risk, or buying yourself that reward of not having the risk, which is what you're doing. And how much is that going to cost me? So I did a little analysis the other day thinking about this, even just personally. I said, what if I sold a house for $1.5 million? I have a $400,000 mortgage and I'm going to be transferring that over and I have all this equity in the home. So how much is it going to cost me to bridge for 6 months? Right. So I have a 6-month window, worst case scenario, all the rest of it. And I think I landed in around $45,000, $50,000 is what it was going to cost me to carry in more and pay all the interest and everything. And that's a lot of money. But then I looked at the scenario we're in right now today. If I sell my house, if I buy a house today, I'm actually going to get a pretty good price because I know it's a low of a market. Mm-hmm. I also know the interest rates are going down. And as a real estate agent, I also know that I predict a huge spring. And I was pretty confident that the prices are going to go up. Inventories come down, prices are going to go up. I may be able to take advantage of the fact that the home price of my house, if I sell it in the spring, will be $100,000 more than if I sold it today. So I'm actually $50,000 ahead if I do this. And it's a unique scenario where we know the market's going to start going up in average price. And I say we know, listen, we don't know, but we can educate a guess. Yeah. So that's why it really resonated with me as a homeowner who wants to maybe make a move. Yeah. And I think it's a great opportunity. And I think, Jason, you've opened up this, aha moment, because in 20 years in real estate, I've never heard of a scenario where I can have my cake and eat it too. Yeah. So, and best case, I make money. Worst case, okay, it costs me some benefit of, managing no risk. Mm-hmm. And it's just going to cost a little bit of money. You get into a perfect scenario.
Yeah. So I think of so many different situations where this could be hugely beneficial. Like, so the new rule, for example, which we hadn't talked about yet, that's coming into effect January 15th, which is the high ratio refinance up to 90%. Okay. With a max value, up to a max value of $2 million. So imagine this scenario. You have a family. I'll just use myself as an example. Steph and I, right, we've got two kids in university. We've got aging parents, right, so on and so forth, potential health issues. If we were in a situation that we wanted to leverage the new rule on January 15th to tap into equity to create a retrofitted, fully functioning legal apartment in our primary residence to allow for my parents to move into, right, comfortably, giving them some time to, sell, so on and so forth. You've got new rules coming into effect that support us, Steph and I, as the homeowners, to potentially tap into more equity to actually support construction, renovation for a family member, right? And just to kind of talk about that change. So there's still some of the details to come out, but up to 4 units you can actually include in that financing on your primary residence. It doesn't have to be basement as well. It can be your main level and so forth. But
so servicing that, we'll call it payment, that will come up, because I look at that and go, who's in a situation where they're going to leverage $2 million of equity and then have all those payments? Yeah. Right now, interest rates are coming down, so it makes it easier. But gosh, you're going to be making a lot of money. But what you're saying is that you'll probably end up making these accessory units and renting them out. And that's what's going to service that. And of course, your equity in your home goes way up even after that, because you're going to revalue your home afterwards. And then, you've increased value in your home and even gained more equity in the end. So I get it now.
Yeah. Well, think about this too, Eryn. So if my parents would say, okay, well, we're going to move into this new beautiful suite you're building for us, Jay. We'd like to help out with the cost initially. We're going to sell our home, but it's going to take us time to get ready to sell our home. If we wanted to execute this today, we could leverage this private strategy to actually tap into equity there. They're retired. There's no income that they would qualify to support a meaningful reno on another property. But again, this would be an opportunity to bridge the gap, to prepare early, prep their place for sale, right? And then eventually tap into that refinance to replace any capital or equity that was required once we get into the new year. So you're absolutely right, Eryn. There's so many potential opportunities and there's so much support of partnership and collaboration between, our realtor partners and our mortgage teams, right? So, and all in an effort to deliver exceptional experience for clients. So.
Every time I talk with you, Jason, about any of these kind of interesting, unique scenarios, it boggles my mind how many people go directly to banks to talk about their financing solutions, because mortgage brokers have so many more tools in their tool belt. It just makes no sense to go direct to a bank when you can talk to someone who has all of these opportunities and options to kind of brainstorm with too, right? Because a lot of things that like even myself and Eryn may not come up with these ideas, but talking to you, you're like, oh, there's this scenario here. This maybe works best in your situation. And to have those conversations is only something you can really do with a mortgage broker.
Yeah.
And these tools and these tool belts, and using somebody like you, Jason, or, the mortgage specialists that are out there, we're talking about living the dream in real estate, right? Realizing your dreams and the things that you can do with the knowledge that you can leverage with other people, and get a professional. Because again, it astounds me, some of the stuff, and my head spins when you start talking about some of the different financing things, and I'm just like, it just tells me I need somebody who really knows what they're doing. We buy and sell houses. Yeah, right? Absolutely. And I'm such a big fan of that. I really think that you need the best in the field for everything that you deal with, and try not to get that jack of all trades, right? When it comes to these things, because you can really, put yourself in a great, whether it be risk, whether it be reward scenario.
Yeah. No, absolutely. It's such a good point, Eryn. I mean, this is what we do day in and day out. We live and breathe it, right? We I'll just use our team as an example, Centum Canada, right? So Centum Financial Services, we are onboarded with 50 A and alt lenders. Mm-hmm. We are onboarded with 60 plus private investors or lenders and mortgage investment corps, right? If you go to a bank mortgage specialist, and there's some incredible ones out there, but even at the top of their game, their best, most knowledgeable, most credible, most trustworthy specialists, they're still only in a position to give you guidance and fulfill the need with, their one solution or their bank's solution only, right? So, the risk appetite of the banks is oftentimes nowhere near what some of our lending partners can accommodate outside of it, right? So, yeah.
Well, I really appreciate. I've got a phone call from a mortgage specialist the other day, and they're often looking to work with us and work with our company and stuff. And I chatted with him a little bit about it, and he says, "Hey, I'm with XYZ mortgage company." I hadn't heard of them before, and I said, "Have you run into any, pitfalls and stuff like that, or how do you enjoy where you're at?" And he said, "Well, my main concern is we only have access to 14 different lenders, and I know there's a lot more out there." And you had said 50. I'm like, "Oh, you got to talk to Jason then." Because Jason can really start, his head's going to spin when you talk to him, because the ability to look at all the different, and it's always changing too, right, Jay? I mean, you're telling me, oh, so-and-so just came out, one of your partners just came out with a new product, and you got to check this out. And that's what happened, right? Did you go to a recent conference and you came back with some more tools?
It was amazing. So we just came back from the Centum Summit in Costa Rica. It was phenomenal. We had a great time. But one of the biggest benefits was, the pool business meetings, right? The pool in the pull up a
pool, the one that you sit there and then
But we had some of our biggest lending partners, sponsoring our event, and they're in person supporting the event. And the conversations were phenomenal, but exactly as we're kind of organically talking about different potential opportunities and solutions, talking about exactly what they can do, things that, like double clicking on all of the solutions that they offer. And I'm like, all of a sudden, wow, really? And, having the personal connection with them as well, so that when we pick up the phone or make that submission, they know who I am, and I know who they are. And, they're going to go that little extra mile to fulfill the need for the client.
It's one thing we always talk about at our brokerage. Like, one of our big things that we like to do is say, like, we can grow together, right? And by putting more minds in the same place, you can help each other out, right? And that's something that you can get, again, out of these conferences, networking, larger team mortgage brokerages. You can kind of spin those off each other. Whereas, again, at a bank, it becomes a bit more difficult because there's like one narrative. And like you said, banks are a little bit less risk adverse, and they don't know the local markets as well as some of the lenders you have access to, right? Like, one buyer recently was looking to finance like a mobile home on leased land, right? Like, and banks tend to stay away from that kind of stuff. There's some lenders in place and some private lenders that will touch that kind of thing too. So it's really important to make sure you have those conversations with mortgage brokers.
Actually, something that came out, which I'll just take a second to let you guys know too, because one of the things, so we can lend across all provinces in Canada. It used to be, in May, I had to say with the exception of Quebec. Now we can actually do business in Quebec. We also have a partnership in the US now too. So we can actually fulfill client mortgage financing requests, home financing requests in the US. Yeah.
Taking over the world slowly, eh? I was going to say, I thought you had a bit of a tan there. I'm a little bit jealous of your conferences in Costa Rica. Our last conference was in Ottawa, so yours is a little bit more exciting of a location.
Hey, Linus, you'd be a welcome addition to next year's Dominican. So
just bring a big suitcase. I'll stuff myself in and I'll hop along.
So, but maybe a positive thing you got back from Costa Rica. I know there was somebody stuck down there because of flooding. Apparently, the tarmac there at the international airport in Costa Rica got flooded, and they actually have to repave the whole airport runway in order to take off. So, I would say positive, negative. I mean, somebody has to spend another, few weeks, if not more, in Costa Rica. I mean, it's not a bad place to, I guess, get hung up.
Yeah. It's Carolyn Rapson, actually. Yeah, she's still there. She's stuck in Costa Rica. I'm hopeful that the rain clears. So the Costa Rica's rainy season typically ends in November. So hopefully she'll be rewarded with a couple of days of just solid sunshine and warmth before she has to get back on the plane and come home. So,
got one more question for you about Costa Rica. Did you get any fishing in while you're down there? I know the answer is probably yes.
Yeah. So I was waking up and I was getting up super early. It was a gorgeous resort, sprawling resort, bit of a walk to get to the beach, right? So, my goal every morning is to be up at sunrise on the beach, casting into the surf. First morning I go down, 20, probably 30 casts, 20 hookups. Landed at 7. They're like Spanish mackerel, small snook, so much fun right off the beach. So then Steph came down with me the next morning. It was a little slower. So then we're like, hey, let's jump in one of these 2-man kayaks. Okay. So we were getting, and so comical. I wish we had somebody video the two of us trying to launch and get over the surf to get offshore. It was hilarious. It was absolutely hilarious. But yeah, we got offshore, and this was just after a pretty significant rainfall. And so there was a river that comes in just at the one end of the beach. So it created this mud line right out from the resort. And I'm not exaggerating, gentlemen. There was a line of flying fish. It was probably a mile long. And there was other bait, it was, 100 feet wide, 200 feet wide, and a mile long of flying fish and other bait. And then, this is on one side of our kayak, and on the other side are these amberjacks and huge fish busting. I've got the video, or part of the video. So I'm casting, I'm like, turn the kayak. So I'm in the front, Steph's paddling in the back. I'm like, turn the kayak, Steph. I turn, I cast, hook up. I had to literally put my hand on the reel because it's just ripping, peeling the line off my reel to drag like crazy. Just like, zzz. It's pulling our kayak out. So I fought it. We didn't get to see it. We didn't get it close enough to the boat because of the mud line, right? It was it went into the muddy water and we couldn't see it. But yeah, it was big. My assumption it was an amberjack, a good sized amberjack. And yeah, it was a blast. We had so much fun. Yeah.
I would have been freaking out. I know you've done this fishing before. I would be. I'm gonna kill myself out here. This is nuts. So cool.
So is the real reason you dragged Steph out on the second day to make sure you had someone to paddle for you while you're in the front casting?
You know what? So very transparently, Steph loves fishing, but she's not hey, 8 hours and so on. And I'm like, honey, you will be rewarded for your early wake up if you come out, right? So she did it, and
well, there's loves fishing, and then there's Jason loves fishing, right?
That's
different level, and it's hard to get there.
Yeah. And it's always an adventure, right? So with the out in front of our resort, there's like huge like volcanic like rock outcroppings and like incredible scenery and landscape. So yeah, it was an adventure. And then we came back in, and there was a couple of guys there waiting because they could see we were having some excitement out there. And like I'm like, okay, babe, we're coming into the surf, and okay, you got to keep paddling. I'm gonna steer, and you got to keep paddling through. And then we're coming in. I put my paddle down to go to get out, and she stops paddling, and the kayak goes sideways, and we just got launched into the sand. And then
there are so many analogies I can think of. There's so many analogies I can think of with just that one experience and what we do every day in terms of mortgage financing and real estate. I could go in so many different directions.
So am I going to be tuning into your guys' new show next week, Catching Fish with Jason and Eryn?
You'll have all the stories. I'll just ask the questions.
And it might be worth conversation. I was Stephanie and I were talking here in the Bradford office yesterday about an ice fishing adventure this winter. Hopefully we'll get safe ice in Cooks Bay, and yeah, we can set that up.
Perfect.
And we can do one in Kingston as well. There's always safe ice in Parham there, Linus. Yeah.
Sign me up. It's probably a great point to end the show on. So thanks again, Jason and Eryn, for joining us here today. Thanks for everyone who's watching the show or listening to it. If you like the show, you can subscribe to the show pretty much wherever you find your podcast. You can check out this and past shows at livingthedream.show. Everybody, thanks for watching. Have a great week.
Thanks, guys.